Hey guys, this is Wendy McCroskey with Group 4610 Buyer Blog. Thanks for joining us again today. Once again, we have the wonderful Matt Merritt from Bell Mortgage with us. And Matt, I want to first off start with thanking you so much for taking care of Stephen and Lindsay that I sent you the other day. Guys, I had a client come to me and they had not a bad experience necessarily with a mortgage person, but they weren't getting their questions answered, felt like he was kind of dodging some of their questions, wasn't getting all the information that they were looking for. And I said, you should really talk to Matt Merritt. My clients love him. He's very informative. What I love about Matt is I have several clients that have some lower credit scores, and Matt's kind of helping them, advising them on how to get that up so they can purchase and make that homeowner dream come true. So I talked to Lindsay today, and she was extremely ecstatic, said you were very helpful, answered all her questions, and she felt way better than she had when she spoke with a previous mortgage broker. So I just want to say thank you for that.
No, you're welcome. You're welcome. It's critically important, especially for first-time home buyers, to understand what they're doing. This is the biggest financial obligation they've ever gotten into. They need to have complete clarity on what's going on, and they're gonna have questions. And I kind of joke with people and say that the only dumb question is the one you didn't ask. So ask them all. And in this process, we'll generally answer 95% of them just in normal conversation, but you're going to have that one that sticks in the back of your brain that you think, oh, I don't want to ask it because it's dumb. That's the one you should ask. I mean, you have to be clear on what you're doing in this stuff. And if that takes 20 minutes or that takes an hour, then that's okay. I mean, you need to be comfortable at the end of this thing when you buy a home.
Exactly. Totally agree. I mean, on the buy side too, that's what I'm always telling my clients, ask the questions. Don't be afraid to call me and let me know what that little voice is telling you in the back of your head.
And it'll be 2 a.m. It'll be the 2 a.m. thing that went, well, what about this? And I joke with people about that and say, the 2 a.m. thing, write it down.
Right.
Be sure and get it out of your brain so you don't forget it. And whether that's a phone call or an email, be sure and get the question answered.
Exactly. Well, what we'd really like to talk about, the purpose of today's video, is the tax credit.
Mm-hmm.
Obviously, it's coming up soon. The end is near. I've had a ton of buyers calling and wanting to look at properties, which is very exciting.
Yeah.
Tell us about, because I know there's a few misconceptions as far as when you have to be under contract, when you have to close. How much is it for each type of buyer? Kind of tell me a little bit about that.
Well, a couple of things. It's for primary residence purchase, number one, and there's two of them. There's a first-time buyer, which is defined as the obvious, which is never owned a home. It's also you haven't owned a home in 3 years. That's $8,000. There's a move-up tax credit as well. So you're moving out of one house into the next one, again, primary residence, for $6,500. You have to be under contract on that particular house by the 30th of April, and you have to close by the 30th of June to get those.
Got it. Okay, so now is that $8,000 for anyone? As far as if you're a single person not married, do you get the $8,000 as well?
Yes.
Okay, so it's not a half or anything like that.
Nope.
Okay, perfect.
Nope.
And is there anybody that doesn't qualify for that? Like I know the old one, if you made like over $75,000, it was reduced, or is that on this one?
On this one, it's the maximum income limit is $212. So if you make under $212, you'll get the full tax credit. Now, be clear on this. This is one thing. It's a common confusion. This is not a tax deduction. It is a tax credit dollar for dollar. So make up the example. If you're getting a $1,000 refund this year, you would be getting a $9,000 refund. If you owed $1,000, you'd be getting a $7,000 refund. So it's dollar for dollar, unlike a write-off you would take where it's going to be prorated to your tax bracket. So make up the example, $1,000 write-off, if your tax bracket's 30%, you're only getting $300 on that. This is dollar for dollar, so it's a pure $8,000 to you. And again, if you're getting a refund or not getting a refund, depending on what that looks like, it's straight dollars to you.
Got it. And they can amend actually their tax return. So like if they've already done their taxes this year,
correct,
they can do an amendment and get that money.
Absolutely true. Yeah, I've had a lot of people that have already done that this year.
Perfect. Okay, wonderful. Well, thank you guys for joining us again today, and we look forward to seeing you next time.